Good morning, everyone, and welcome to the European crossover webinar. And we are seeing things a little bit quiet here. The bigger mover actually was the dollar yen. We did go and see the yen strengthen. We also saw indices pair back just a bit. One of the things that I noted yesterday in the chat room that we may see a little something here is you can see here on the 2-hour chart on the NASDAQ, and you can see what appears to be just the inklings or the first signs of a head and shoulders. And like I said, I was noting it was like, well, we're starting to see the early signs of this head and shoulders, if that's what it's going to be, and that maybe that would allow us to pause back, and it did. I mean, I'm not saying that that was the main reason, but we did go and start to see markets going in pair back a bit. Move this out of the way. So while this was forming, we were already seeing here on the Russell, we were already starting to break down a bit here, and bear with me. And you can see here with the S&Ps is that we were already breaking down a bit already here, but we were just kind of sliding off. This up a little bit higher. But we were already starting to break down here. So, and whereas the NASDAQ, which had been leading the pack, was then starting to form what appeared to be the early signs of a head and shoulder, and we'll see whether that fully matriculates, but it certainly looks like it's heading that way. And as I can say, you can see here, the one that was the more weaker of the bunch was the Russell 2000, which was already failing. S&Ps were just barely struggling to hang on, and the NASDAQ was looking like it might be forming a head and shoulders. So we'll see what happens on that. Obviously, today is ECB day, and let me go in and take a look. Bear with me. Here we go. I was thinking, boy, I hope I'm not going crazy and thinking, oh, I just said there's ECB day, and oh, it is ECB day. But we do see as we come into today, we also had Australian employment yesterday, which came out actually a nice little number here that came out here. Look at that, nearly 29,000. Look at what they were expecting 15,000. They came out with 29,000 essentially right there. A surprise of nearly 14,000. So we saw a big jump. I mean, we saw a jump. But I did go and post on here. We had resistance. I think I put on here, it's in the room, 68.83. But I don't think anybody was there even paying attention at the time. I didn't see anybody in the room at the time, so I don't think anybody was trading it. But anyway, looking on to today, before we get right into the ECB, we do have some Mexican data here, core inflation. Then we do have the ECB. The usual suspects, which is going to be the jobless claims, followed by leading index. And let's see here. And consumer confidence flash out of the Eurozone, which comes out at 10 a.m. Eastern. Let's go move this out of here. And let's just go in and pull up news story. So the yen jumps, the yuan sags on Chinese virus fears. The Japanese yen strengthened and China's yuan fell to a 2-week low on Thursday as investors grew more anxious about the spread of a virus in China, while the euro was calm ahead of the European Central Bank meeting. Elsewhere, Australian dollar rose 0.5% after a surprise drop in the country's unemployment rate. Deaths from the flu-like coronavirus stand at 17. Almost 600 people are infected, and China has locked down the Wuhan city of 1 million people, where the outbreak is believed to have been originated at an animal market. The moves up in the safe haven yen and down the yuan were measured, suggesting investors were not yet panicking about the virus. The dollar gained versus the offshore Chinese yuan, which has also now lost more than 1% of its value since its 6-month highs. Hao Zhu, an economist at Commerzbank, said the worry was that the virus would hurt China's domestic demand. To cope with this risk, monetary policy could illustrate further easing bias for the FX market. Risk-off mode is likely to dominate for the time being. Also, the euro dollar was trading at 10.89 and was little change before the ECB meeting, as was the dollar against a basket of currencies. The ECB introduces a stimulus program in September, and data suggests then that it suggested some improvement in the Eurozone's economy, so analysts could doubt ECB's Christine Lagarde will announce much on Thursday. Investors will focus on her answers to questions about the ECB strategic review, which could change its inflation target. The ECB meeting will, in our view, have limited implications for the euro dollar. The two keys in the ECB's message should be, in our view, that the data suggests a pickup in inflation and the manufacturing cycle has bottomed out. Now, we did see, remember, I think it was Thursday, and actually that's what really kicked the euro down the stairs even further, I think it was Thursday, last Thursday, could have been Friday morning, but anyway, where the German BID came out and stated that the country's manufacturing sector was in a recession and no signs of bottoming out, and that really kicked the euro downstairs. But anyway, it says the ECB rate decision is due at 12:45 GMT. The press conference starts at 13:30. The Australian dollar gained 0.5% to as high as 68.79 after data showed unemployment declined to a 9-month low. Sterling consolidated around 30.40 after gaining Wednesday on dwindling expectations the Bank of England will cut interest rates next week. The euro fell to a 3-week low against the Swiss franc, 7.37. The franc has been strengthening since the U.S. Treasury added Switzerland to its watch list of currency manipulators, which led some to bet the Swiss National Bank will be more willing to let the franc appreciate. Canadian dollar dropped again, reaching a 1-month low of 31.70 against the U.S. dollar after the Bank of Canada on Wednesday signaled a future rate cut should a recent slowdown in domestic growth persist. They were kind of all over the map. If you saw the presser from that, I never heard some more on one hand, but on the other hand. On one hand, it's good, but on the other hand, we could see some weakness. But on the other hand, it's still good. I mean, that was just something else to listen during that press conference. But anyway, nonetheless, let's go on. Bear with me while I go and get the bias chart ready. So, since the euro is marking time until the ECB meeting, support is 10.56, followed by 10.20. Those are the same figures that we were looking at, yesterday. Resistance is 11.20. barring Lagarde walking out with a pair of hawk wings, one is better off ignoring the rhetoric and simply trading the levels. And essentially, that's it. I think those are going to be the focuses. We're looking at support at 1056. Here, looking on the daily. You can see that coming across here. So 1056 and then also 1020. And on the upside, like I said, it comes in at 1120. Remember here, we ran out of gas, I think it's right here at 1117. Yeah, 1118. So I'm saying 1120. It might even be a little bit higher. I guess you could say right here, which is going to be 1126. So and 1056.20. They're not even expecting much from Lagarde, and really they're thinking that it's really not until they get into the question answer that we could move it. Look, we might bebop around, but I just don't really see a whole lot happening with the euro to speak of. One of the things that we talked about here, and we still have this potential head and shoulders. I saw this, and obviously Amanda, she saw the same time, but she's looking at not 897, and my target was 917. It's in the same ballpark, 20 off, difference of 20 pips. But one of the things I looked at, look, how many times have the bulls been left at the altar? That was one of the things we started off the week about, the bulls being left at the altar. I mean, it's been 1, 2, 3, 4, 5, 6. I mean, it just goes on. Every time it looks like it's going to take up, it falls right on its face. So to me, this last time, it looked like maybe it had a chance. Certainly looked like it was on its way here. Then it falls back like, oh, okay, well, they fell back, but now they might get going. And even then, it was rather limited. They couldn't even get past this key 1170. And here we are falling back. So anybody who was left was like, we talked about that. Hey, look, on Friday, look, if we close below 1105, that's it. And we did. And that was essentially, if you were bull and you're exercising some, just technical discipline, you really had to just say, you know what, I'm out. Below 1105 on a close, I'm out. And so we've kind of held around here. But, even if we do move higher, it's going to be like, no, they're not going to fool me again. I mean, if you think that. The only thing that potentially, if we do see equities start to slide back, there's the old thing about the euros used as a funding currency, blah, blah, blah. That's about the only thing it can hang its hat on, because like I said, we did get the come out from the association about the German manufacturing. They're the hub, the engine of the Eurozone, and that they're saying their manufacturing sector is in recession and no signs of bottoming out. I mean, other than maybe the potential that indices slide and this is a foreign funding currency, blah, 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 you just don't really see where the thing's going to go and pick up. I mean, everything just looks weak. Everything just looks like a mess. I mean, to me, the Eurozone even looks vulnerable. I mean, it's almost laughable the way they're rolling over for Trump. I saw the news on there saying about, oh, well, we definitely think we can go and get the deal, the trade deal thing about the, as far as autos, and, oh, we can get those done. We can get it done. But before the end of the year, they're so scared, they're shaking in their boots. So, like I said, it's, it reeks of desperation, to be quite honest with you. But anyway, I just don't see where you can, where we would see a significant catalyst other than the potential for, let's say, equities to go on and all of a sudden weaken lower, which I guess, like I said, the concern with the virus or whatever, but I mean, we're starting to see them pull back, but are we seeing some significant move? No. So once again, that's what my point was. Just trade the levels. Don't even listen to the rhetoric. Just trade the levels. Okay. So this is a little bit close. So right here, the 1056. So if we come down to 1020, maybe we dump down here and just, like I said, if you want to play the quick short side, could do that and then cover, unless you're, hell bent to think, okay, we're going to push low and that's the end of that. And same thing on the upside. You got to be thinking, hey, look, it's going to be hard to believe that anyone would just go let this thing and rally. Stranger things have happened, but like I said, what's going to be the catalyst? The data's been poor. I'll give you an example here is what we talked about. We saw that surprise data come out. Let me come back to this. Hang on. So, you know, look what the Aussies did. Okay. You see something like this, employment. Okay, expecting 15,000. We get, double that. Okay, tell me when we've seen anything like that out of the European data. You see what I'm saying? You see something like that, then you can say, wow, this is prone to really start to take off. One of the things that I mentioned yesterday about the dollar CAD, and I thought that maybe we may just go and be able to rally is when you look at the dollar CAD, let's just take a look at that. Now that's one possibility. I'm talking about the Aussie data because, like I said, out of nowhere you get this big surprise. Okay, so maybe you can set it for a turnaround. Let's take a look at the dollar CAD. Okay, one of the things we talked about is it was sitting here going nowhere. And as we start to move, I said, well, you know what? It's open. It could start to move higher because someone was asking about. We're looking at the resistance levels. I go, be careful. I go, this reminds me of I think I said it was like 3 or 4 months ago where we saw the same kind of setup where the market was quiet and it just ran away. I don't know if it exactly where it was right here. Maybe it was in here. I think it was quiet now, so we ripped up. Now we ultimately ran out of gas. I think it was here, but we were open to really start to pop up. And you can see here we were so quiet that it could break one way or the other, either to the downside or to the upside. And they ran with this. And I said, be careful because this thing could start to potentially could get some legs and it won't want to give up. And certainly we did go in and work hard. And there really wasn't anything that in the Bank of Canada that they said that you can say, oh, wow, it really, like I said, the pressure was on one hand, but on the other hand, things kind of look weak, but wait a minute, all the data looks good. The point I'm trying to make is two different catalysts. Here, from a technical standpoint, you could say, wow, it is weaker, but look how it's been holding its ground here. It's not going one way or the other. Which direction wants to break is you probably want to go with it from a technical standpoint, referring to the dollar CAD. And then from the Aussie dollar, as I mentioned, out of nowhere, everybody thinks that the Aussie is going to fall into the toilet. We talked about the weakening consumer demand, blah, blah, blah. And then we get the employment report, which is literally double what they expected, double. So a surprise like that. Tell me where we've seen either one of these happening with the euro. So I don't want to spend too much time on the euro, but obviously it's key for today with the ECB. So that was my point when I was saying in the analysis, I go, barring Vanguard working out with a pair of hawk wings, one is better off ignoring the rhetoric and simply trading the levels. So my take is, and like I said, nothing against the guard, it's just that they're not even expecting anything until she starts to talk in the presser and they're talking about that review that might change things or whatever. But at the end of the day, the only thing that's going to matter is the technical levels. That's it. So my thought is you can, in a sense, fade it, or if you play it from the long side, I'd be getting the heck out of Dodge at around 1126. And on the downside, well, like I said, 56 might be a little bit close, but on the way to 1020, you may at that point want to cover some because we'd probably see a little bit of a bounce. But ultimately, you can see right here, we're resting on this trend line. We close a little bit lower here. You could really start to see the market pile on a run going here to 917, or as Amanda's she's got 897 for her target. Anyway, enough of that. I just, it's key because today is ECB day. Let's go and move into the cable though. Anyway, I just wanted to share what my thoughts were on that. So let's go and move on to the cable. Okay, cable has put together 3 positive days, saving the best for last. Obviously, like I said, we talked about here. Right here, yesterday's action. Saving the best for the last. Now, weekly level 3082 is huge for the upside. It's huge for further upside and will serve as support. Resistance is going to be 3166. You can see the 3166 here. So let's mark off this. Now, last Friday, we were looking like we were going to take out that 3080. And so, as I mentioned, 3080 is key on the weekly, is huge, and would be, and we could see it further move. Let's focus on that. I've shared that chart before. Here's a weekly. Look at that 3082. Now, we challenged it last week, and we were on the cusp of closing above it, and then we got that data. I don't know if it was retail sales, whatever it was. It came in really piss poor, and we sold off. But look, here we are back up above, and we're doing okay. I'm saying is a pullback to 3082 is going to be defended. Here's the key. If we close above 3082, it really opens the door for us to move up in here into, take a look, 3328. Now, they're going to be, my thought would be they're going to be defending it on any pullbacks to 3082. So hence, I'm saying that for support. Anything can happen. We might end up falling like we did last week, but tomorrow's Friday, so we'll see where we stand. But right now, you would have to think any pullbacks are going to be defended here at that weekly at the 3082. Let's go and jump back in here on the charts. And 3166, that's what we're looking here for resistance. Let's go move into the Aussie dollar. And there's simply, well, from yesterday, there's no change, but, and I was putting together, I won't say necessarily compiling, I wasn't compiling any data, but I was doing the analysis, an Asian analysis, before the employment report. One of the key things we're looking at, which was, remember, here's that key support, 68.48. We closed right below it, and the day before, we closed right there. Now, we probably saw a little bit of short term. Remember, we talked about there are, a lot of people that were getting short previously, looking for a real good pullback, and they're underwater. I mean, from right back in here, thinking, okay, we're going to get RBA rate cut, blah, blah, blah. Australian bushfires are certainly going to be increase that likelihood of a potential rate cut. And these guys were, guys and gals were underwater for a few days, but we did come back down. We made it down here to the 68.42. We even weakened a little bit. I mean, we closed below it and then went a little bit further, but that was a surprise. And then once again, like I said, here we are talking about, once again, catalysts. So even though the Aussie was weaker, you see a surprise down like that, you can say, wow, well, that certainly warrants at least some short covering. Key right now is going to be this close right here. So let's just call it, tell you what, let's just go with 68.73. That might be, well, I'll tell you what, because we did get that surprise, and as far as stretching it, now that will be key for a close 68.73, but for resistance right there, which would be 68.86. There, maybe to scare some shorts a little bit, which we're already at 68.86, and we'll keep the 68.17 because if we do eventually start to slide back, where it looks like potentially they're going to go to. They're going to go much weaker. We're looking actually for a move. Remember, 67.48 with that break below this close. But in the meantime, there would be some support at 68.17. That may seem like a little ways here, but once again, the market is still susceptible to that down move. So although we got a surprise, it may hold them hostage for today and tomorrow maybe, and then we might start to weaken. But once again, that surprise in the employment certainly is going to reduce those possibility of a rate cut. We shall see. Let's go on and move into the Kiwi. Same thing here in the Kiwi as far as no change. Literally, you can see why there's no change. We're just simply sitting here. We're not moving. The market is still definitely bullish, and we're actually holding our own despite, risks with the virus. And but the key thing has been we've seen very, very good New Zealand data over the course of the last, oh God, probably 6 weeks or so. Very good data. So we're kind of holding our own here. We're just marking time. So you look here, no changes. Upside 66.46, downside 65.44, which is a 38%. Let's just go and move this a little bit closer here. There we go. And let's go and bring up the dollar CAD. So we talked about that. Obviously, when I was making the comparison as to different catalysts for a movement, i.e. the lack of, meaning the euro, and how with the Aussie that we just covered, we have the, like I said, the surprise, the surprise in the economic data, something we have not seen here with the euro. I mean, everything's been, piss poor. So, what's going to be the driver? You know what I mean? Even in the presser, they're not even looking for anything, there other than maybe the Q&A that we're talking about. But let's get back here now to the CAD. So now with the CAD, here's what we're talking, like I said, now the catalyst here, once again, we're talking about the lack of on the other one, is the door was open for potentially for this market to go higher. Now, in the presser, did they say anything? Once again, like I said, it was I've never seen more on one hand, but the other hand, on one hand, but the other hand, since I can't ever even remember when. I mean, for everything he could point to that was better, he'd point, oh, but there's a risk this, and he just kept going on and on. My point being is, there wasn't anything in the presser specifically that he said that, oh, wow, we got this big rate cut coming. He just, in a sense, was, very neutral, although saying, well, if things do get weaker, we would open with a rate cut. Okay, whatever. But my point being is, from a technical standpoint, you can see here where the market has been holding its own, although lower, but it was still holding its own, and even at least off this list, was open from a technical standpoint where it could move higher. And that's what we saw here. And the key thing is that we talked about the resistance being at 31.13. Remember how we failed there on the Thursday, right before the employment data. We came up short, and we really didn't do anything for, over a week, well over a week. And so we had 31.13 and 31.36 with a little bit of stretch at 42. We kind of pared back a little bit, but we reasserted ourselves. We actually came back down to 39.7. Remember putting in the chat, looking at the 2-hour chart, I said supports at 30.97. That's actually where they bottomed out. Probably should have got long, didn't even think about that. But if nothing else, just for a bounce back. But we did want to move higher. And now when we look as to where we can potentially go to, let's go and get into that. So it says the dollar CAD rallied post BOC decision, closing above the key level of 31.36. The door is open for the first test of resistance, which is going to be at 31.81, followed by 32.07. Support is 31.13. So support now is going to be the level that they got past, which is at 31.13. And on the upside, it's going to be 31.81. And I do want to mark this one because this one is going to be a big level, 32.07. 32.07 is, and the reason I want to mark that is because, like I told you, I believe it was this. I know this on. I think it was on this day where the market just freaking ran away. I just like bowled over everybody because it looked like it was on the precipice of dropping lower, and we just bowled everybody away. We added even further, but then we ran out of gas, and everybody was thinking, okay, we're going to take out 33.82 because of this strong move. Look, that was just a huge move. And we just sat there going back and forth until we eventually slid back down. Well, 31.81 is the next challenge coming up in here. Comes in right there. 31.81. but it's 3207, which is going to be key right there. You see that 3205.7 Mox Nix. That'd be huge. My thought would be is if we were to add on to that and we made it up there, I think you'll see some profit taken. Even if it's short term, still going to be profit taken, 3207. But like I said, so we're going to mark that off here. May see a pause here, and there's every areas right in here. Actually, if depending on if whether you're looking at a half hour or a daily or 2 hour, there is some at 3175 and 3181, as we just point out. But here's where I think the market would definitely, if we let's say we goose some more stops. Yeah, let's just say that we had some people that were short this market, and they came in and they shorted, let's say 3125. So my thoughts would be if you get, maybe they're still going to hang on to the shorts. And then we get up to 75, 82. Well, we can't go any higher. And then we go further. And I think that it would knock some of those people. They just end up, covering the shorts. Well, I think that if we get it up to 3206, you can see here, /7, then I think at that point, you'll see some people take some of those profits off the table, and then we dip back a little bit. But anyway, that's a take there on the dollar CAD. Let's go on and move into the dollar peso. So the dollar peso retreated from its feeble rally on Tuesday. Support is 1865 with resistance at 1880. Wow, you know what? This is really surprising. I would have expected far more. We even talked about this, just like although it's a different situation, unlike the dollar CAD. I mean, we've stabilized, but we were just sitting here stabilizing as we came towards this target low that we've been looking at, which was 1865. But we talked about it. I go, hey, you know what? If we do see these equities pull back, I think we had discussed that on, I guess it might have been Tuesday. But anyway, nonetheless, on Monday, because we did have the holiday at that time. But I thought if we did see a pullback in equities, we would come up towards the 1905, and thus it was quite the feeble rally. And we've already paired back. So support's going to be this 1865, and resistance, ain't much to hang your hat on. It's going to be right there at 1880. And let's go into the dollar yen. Well, we did see the dollar yen pair back, and we talked about yesterday at that 965, and we actually made it down there. I had actually covered my shorts as I had, and finally it was later on the day. I'm kind of a little bit upset because I should have been more aggressive, but as I started to find this starting to slide better, I said, what the heck? Before the close, I did go in and get short again. The only thing that does upset me is I wasn't aggressive. I had the opportunity to kind of, I don't want to go as far as say load the boat, but I could have gone and put on some, good size. I just kept it fairly minimal. And when we did dip down there, I think Blake was the one. I saw him in the chat room saying, hey, look at the dollar yen or something like that. And I think we had just come off of, we had almost made it to, I guess, the 964. I was doing some analysis and I was like, whoa, I think it was at 967. I quickly covered, and I was hoping, but I wasn't sure. I was thinking, well, I hope maybe we'll get a rally back up to the low 1880s and I'll jump back in. And I didn't, and now we can see this still weakening here. But one of the things that we had talked about on the way up here was we did have 965 was the breakout level that we've talked about where the market started to scoot up. I think it was right there. You see, 1865, and then that opened the door for us to move higher. The next level on the downside is 842, and then obviously 927. So I probably would expect to see some modicum of a bounce from 842, even if it's only minor. So we're just going to go market, keep it fairly tight. Obviously, if we see further news coming out that is far more serious on the coronavirus, we can see it quickly move down to 927. It's really hung around here, but as I mentioned, equities have been the one thing that's been driving this. So, as I mentioned, it's the NASDAQ that has been the runner. And you can see here is potential right here with a head and shoulders forming. Now, this is on the 2-hour chart. And like I said, nobody's looking. I'm not calling for no big, massive retreat in the equities. Just are we, we already had a phenomenal run here. So, we were about right there at the time. I think it was only this bar forming. Well, now you're starting to think as well, it does look like it's kind of like a head and shoulders. So that was my take. And when I saw that, I'm thinking, oh, okay, well, you know what? Maybe there's a little bit more left to go on this in this yen. And when you look at the S&Ps, they were already struggling. They were already breaking lower at the time. Instead of this was forming up here, they were already starting to break lower. And then when you look at the Russell, that one's already been breaking down. You see that? So I think I was speaking with someone in the chat room. I don't remember who it was. We were talking about it, and I said, you have to look at it in context. Like, it's not like, okay, that's it right there, but you look at it and say, okay, well, that one's starting to form a top. Don't forget the NASDAQ's been the one that's leading. The S&P's already started to, have some troubles. It was struggling. I go, and then the Russell is actually moving already much lower. So maybe we'll see some further follow through with the dollar and potentially going lower. So I'd like to try and get on the short side if we can get any bounces on here. Didn't want to chase on the way down, but only thing I was frustrated is I probably should have been somewhat more aggressive when I did short it before, the equities closed. But anyway, so we're going to be looking at 942, and then on the upside, let's go. Is it 982? Fairly tight. Let's go to the dollar index. So we're still on a bullish stance. I mean, the bias has moved to, for the reason that we've got that close above 97.42. Could the dollar slip back? Yes, but I'm just saying it's in a situation where it's already in a bullish mode. It may not be a strong bullish mode, but it's still bullish mode nonetheless. And why? And we know that the dollar index trades quite often inversely to the euro dollar because the euro dollar consists of 56.4% of the cash dollar index. So it's obviously a heavy influence on that. And unless you're thinking that somehow, some way, the euro is going to turn around, potentially it could. But what I'm saying is all I would do is just go with the technicals, you know what I mean? And that will go on and tell us. But the dollar index, for us to go full-on bull mode, we need to get above this pivot, this weekly pivot, which is 97.89. If we can do that, it'll go on full-on bull mode. And that may just confluence or at the same time that the euro would make a run for its head and shoulders target that I have of 917. I know Amanda is looking for hers at 897. We shall see how that plays out. But my guess is once you get past the ECB, they're just going to go with it. So if it's weakening, everybody's going to be hanging their hat on a head and shoulders target, whether it be 917 or 897. That's what they're going to be pushing for, because if we do see that, that will allow the dollar. And the dollar gets up here to 97.89, then it's full on bull mode, and then we're going to make a run up in here, probably take us up to here around the probably at least up in here, which would be 98.42. It doesn't sound like a whole lot, but that will be enough to go and push the euro down and see how much further, and if you can make it down to those levels that we're looking at as far as target. So this is bullish. Resistance is going to still be, there is some mild resistance at 68, blah, blah, blah. But the key one is really the 980, 982. I apologize. I mean, 97.89 right here. You can see that. On the downside, 97.29. No changes there. Okay, so this would probably equate to probably the euro making a stab around 11.26. Might even equate to a little bit higher, like 97.29 might be like 11.32 or 33 with the euro. We shall see, but that's our support and resistance here on the cash dollar index. With that, let's go and move on into the cross rates. Boy, we've really reached it out today because I was over there blabbing so much on the euro. Let's go and move into the Kiwi yen. So support's going to be this key level. We did have yesterday for 72.19. You can see we're still weakening a bit here. It's really a matter of, we talked about this in accordance with the dollar yen. We're looking for support at 942. We're thinking we'll get a little bit of a bounce, unless we see something really develop seriously with the coronavirus. I mean, we see a big jump up. With that being said, albeit anything short of that, we're going to be looking for 72 as key. And actually, we just about tagged it. We're going to allow, let's see, right here. Let's call it 71.97. You see that right there off that one? So let's go with 71.97 on support. And the upside? Let's go right there. Right there. There we go, just there. Let's go 72.38. 72.38. Once again, I don't think that the yen is going to fall down too much from there. So let's go with 72.38. We'll keep it pretty tight. So we had 21.62. Today's going to be interesting because we do have the ECB. So if the euro were to weaken, we could really see this thing even slide even further. So we have to give it a little bit of extra room. We're going to go as low as here. And that's not really saying a whole lot, but you can see this coming across. Let's go right there. I don't want to go all the way down here. Once again, like I said, if the euro were to weaken past ECB, but it's actually held up overall well. Let's come in right there, which is going to be, well, basically 120. It's 20.99. Let's call it 121. On the upside, I'm not going to give the euro too much credit whatsoever. We're going to go with that 21.86. 21.86. And for the euro odd, keeping it simple, 6104. Upside, unless you think the euro is going to all of a sudden take off, I don't see that happening. Right there, 6166, 6166. Let's go with the euro kiwi. It's going to be right there. And we may have already had that already before. 68.48. I think we even put, yeah, sure enough that we, and I think we had 68.48 the day before and we just moved up to 68.50. So yeah, that's going to stay the same. The only difference is on the downside. Right there. 67.32. Got to allow for some leeway with the ECB meeting upon us. The risk is, despite, kind of bad mouthing the euro, the risk is too lower. What I'm saying is, let's not make any bones about it. It's set up to move lower. Whether it does or doesn't, but that's where the percentages are going for, that it would move lower. Let's go move into the ASEAN. Well, you got to give it the benefit. I mean, you got to give it its due. It's continues to hold above the trend line. We're going to keep it pretty tight. Remember, we're not looking for the yen to strengthen unless we get some really bad news. We're expecting it will strengthen. What I'm saying is, I think that we could see it strengthen a little bit more and then a bounce. From that area, i.e., I'm just using an example with the dollar yen, 97.42, and then we'll see a bounce. But the same thing here, same principle in the sense that I think that the yen would strengthen, but I'm not looking for it to strengthen at this point intraday excessively unless we see some real bad news coming out about the coronavirus. Then we can see it pare back, and then that'll give us the opportunity to jump back in it because I think overall we will see the yen eventually strengthen. I think we will see the i.e. the dollar euro move in time, sub 109, and that's not even asking for a whole lot right now. So my thinking is that this would be rather limited on this today's intraday pullback risk, and we'll go with 74.82, 74.82. And that's what I'm saying, as much as I think it would stretch out. Upside, still going to remain the same, 75.72, 75.72. Let's go into the Euro Kiwi. Of 68.52. don't know what the heck already did that. No wonder. Hang on. On the way, I'm going backwards. Would be actually the guppy. Hold on. Well, we're holding above the 43.81. I like this level up here. Let's go and take a look at it on the 2-hour chart. $44.45. Right there. 43.42. 43.42, the downside. And we'll wrap up with Sterling Odd. Certainly saw that pullback on the surprising Aussie data, and we're going to look for support right there. 90.97. And resistance right there. 91.92. And that covers it for today. Good luck on ECB day. We'll see you in the chat room. And thanks for joining us here on the European crossover.